Hello everyone, welcome back to our YouTube channel AQIB TJ. What if I told you that one company has a hand in almost every major market on earth? Meet BlackRock, the world's largest asset manager, overseeing trillions of dollars. But does that mean it controls the economy? Not exactly, but its influence is impossible to ignore. BlackRock manages money for governments, pension funds, and everyday investors. Through its popular ETFs like iShares, it owns shares in thousands of companies, from tech giants to banks. That means when markets move, BlackRock is often right there in the middle of it. One of its biggest tools is Aladdin, a powerful risk management system used not just by BlackRock, but by other major financial institutions. This gives the firm deep insights into global markets, trends, and risks before most people even notice them. So how does this affect the economy? First, influence. When BlackRock invests heavily in a sector, it can signal confidence, attracting more investors and pushing prices higher. Second, stability. Because it manages long-term investments like retirement funds, it often acts as a stabilizing force during market volatility. But there's a flip side. Critics argue that BlackRock's massive size creates concentration risk. If one firm has stakes in nearly every major company, it raises questions about competition and market fairness. Others worry about its growing role in advising central banks during crises, blurring the line between private power and public policy. Still, it's important to stay grounded. BlackRock doesn't control the economy. Markets are shaped by governments, central banks, businesses, and millions of investors worldwide. But firms like BlackRock? They amplify trends, accelerate movements, and sometimes, quietly shape the direction of global finance. In a world driven by capital, understanding who manages that capital might be more important than ever. These allocation choices can shape liquidity, the ease with which assets are bought and sold. When large funds shift allocations, they can make certain markets more active while others slow down. This affects borrowing costs, investor confidence, and even how companies plan expansion. BlackRock also engages with corporations on governance topics like climate policies, transparency, and executive accountability. While it doesn't run these businesses, its voting power encourages companies to align with broader economic trends. In essence, its influence flows through systems, incentives, and capital distribution, not direct control, but structural impact. If you want more information about economics, then subscribe to our YouTube channel.